Yo, what's going on, boys? So we are back at it today again with another video, and I did one of these before where I just went onto NQ in 2022, spun the wheel, and whatever month it landed on, I literally had to backtest that month candle by candle and see what the results were giving us. So that's what we're gonna do again today. So this is gonna be a very, very fun video to make. Just show you guys that I'm not, cherry picking some month. I know a lot, that's what a lot of these guys do, showing any type of backtest results or results in general with their strategy. They'll pick a certain month that they know performs good, right? They go on that and be like, oh wow, strategy performs crazy. Like, wow, these results are insane. And it's the same clickbait videos over and over and over again. So it's just sad to even see that. It's honestly, it's horrible. But yeah, we're gonna be doing complete random months. I'm going to spin the wheel again today. We're gonna go into 2022 on NAS 100 and pretty much see what we get. So I did this before on the last video. I told you guys that I got rid of December because I only trade 2 weeks in December. So obviously I'm not gonna backtest the entire month of that. But last time it landed on November, and there was 2 winning trades potentially could have made 8%. There's 6 losses I personally skipped on, but we're gonna go over whatever we get this month. So I'm gonna pull up the wheel and yeah, we'll see what we get. All right, boys, so here we are. To give a quick understanding of the strategy, really quick for anyone new here. Market trends like this, right? We put in higher highs, higher lows, okay? This is a consistent trend within the market, okay? So what happens with these highs and lows? Well, sometimes price will have a retracement, right? And you have people entering on these retracements, due to maybe imbalances, fair value gaps, Fibonacci retracements, demand zones, all these reasons, right? Main thing being is actually demand zones, okay? And people will be entering around these, whether that be order blocks, normal demand zones, all this stuff, right? And they'll be entering, and you always hear people talk about how, they're like, man, price just went to my stop loss and then it just reversed on me and went to take profit. We are exactly those people that are capitalizing pretty much on this move. And what's essentially happening is price will be reacting from an area to this left on this retracement, right? You have people buying into the market, okay? You have people buying into the market. What happens is price will actually sweep them out, and then price will continue in its intended direction, which is higher time frame bullish, right? So what happens within this movement here? I know it looks a little choppy, but what essentially happens is, I actually drew that wrong, so I'm gonna redraw it, is people will be buying around this area, right? There's a little, maybe the confirmation they get in, and price ends up doing is straight up stopping them out. And then once it stops them out, hits their stop loss, price then continues up and continues the overall trend. Now what's essentially happening is this area where they initially bought from, they failed to realize that there is liquidity resting, which is a strong low that has sell stops under it for people buying within trend, okay? And a lot goes into consideration figuring out if this is an actual valid liquidity zone, if there's actual buyers buying here and there's actual sell stops sitting below this low. That is one of your jobs with the strategy, is finding that out. But what you essentially do is you want to wait for these people to get faked out, or price just to come down in a straight line, take out this liquidity, and then after taking out those sell stops, price then has a reason to continue up. We are just pinpointing exactly where that reason to continue up is actually going to take place, which is normally a demand zone, order block, whatever you want to call it, around this area. And it's usually after taking a high level liquidity. We want to see price come down real quick, give us our valid entry candle, and price to continue up. So that's essentially the core understanding of our strategy, right? This right here is liquidity, and that's pretty much all there is to it. There's a lot, this goes onto a lot deeper level, but that is the core understanding of our strategy. I teach it deeper on something private, on a paid community that I'm currently working on. I don't really put too much out there on YouTube as this stuff takes a lot of time to learn, realistically. It took me a lot of time to learn. I'm still perfecting it every single day. So again, it goes on a very deep level. So I want to keep this for, some private people. So let's look what we have here. I did this last time, and currently we still have November on here because we picked November last time. So we're going to delete November, and we're going to see what month we get. And February. We got February. All right. So let's do it. So we got February. I'm going to just go straight to replay mode. 2022 February 1st. This is literally exactly what we're doing. On to February 1st. To show you guys real quick, these zone indicators right here turns on at 4:30. That is when I will be starting to trade. Just to, heads up for you guys. So right here you can see it turning on. I'm going to be fast forwarding pretty much between these because obviously I'm not trading within those times. But this month I'm going to try to break things down on a lot, not a lot deeper level, but look at least some more higher time frame narratives, as I failed to do so last time because I was trying to run through this 5-minute testing and give you guys the data. But yeah, that's pretty much what we're going to be doing. So I'm just going to be going through day by day. We actually already have a demand right here that just tapped. So this is pretty much what I was just talking about before. A valid demand zone, level of liquidity. See where we're at our time frame here. Right, I'm not going to be narrating everything, because some of this stuff is kind of what I would call it advanced concepts, which is pretty much beyond liquidity, supply and demand. It's not just this, right? There's some other things I use as well, but I mean, price is trending up. We could potentially take out this level of liquidity if price continued down. That's what we would be targeting. But with price being how it is, we know there's going to be a lot of orders build up right here. This pattern right here, there's some things about these levels that I actually am going to be teaching once I decide to open that up. That this liquidity like that's very powerful. That's what I'm going to say. And I can I teach it down to a T what all those highs and lows mean. But I actually really like this setup. So this would be a setup I would enter. This at 4:50 a.m. So this is just before London close. Stop loss would be right under your wick right here. And we'd be targeting strict 1 to 4s just for backtesting purposes. Live markets, you can be doing, you can read the market a lot better and, decide personally. But yeah, we'll see what we get here. And price ended up hitting TP. So that is literally the first day of February on a Tuesday. 4% already locked in. So that's crazy, right? Price came up, pretty much consolidated, ended up coming down a little bit, and then around 7 a.m. price started picking up again, and then we started continuing our bullish trend. That's literally all there is to it. So yeah, that was a really nice clean trade to start off February. I don't think we get anything else. Usually you never really get two trades in a day on a pair. I've seen it happen before, but it does not happen often at all. So yeah. All right, here's 4:30. There's demand down here. I'm gonna be watching. Okay. Candle right here. All right. Let's talk about this one. Demand right here that tapped. I apologize. It did go candle too fast, but this still doesn't decipher if it won or lost yet. So candle right here, stop loss below this wick right there. Targeting 1 to 4. So let's narrate if I would actually take this trade or not. On a different pair. Those were not taken yet. To be honest with you guys, I would not take this trade. I'll tell you guys why. This right here, liquidity, does not seem strong enough for me. We're currently reacting off a 1 hour supply to the left. And again, this liquidity just doesn't seem strong to me. If we want to continue up, which we barely even failed to take, where we barely even took these highs, we really failed to displace higher. We just kind of took those as a liquidity sweep, it looks like. And if we want to continue up, we need to take a bigger level liquidity. In my opinion, I'm kind of dropping a lot of sauce, but it's probably going to be that low rather than that level liquidity. That's just my take. But this trade could completely 100% win. I could be 100% wrong. I'm fine with, missing out on potential winners that just aren't good quality. But that's my thought on this trade. It did end up losing. That's exactly what we ended up doing, was taking out lower liquidity. We did end up taking out these lows as well. So it's looking like a higher time frame, yeah, because we're really overextended right there. So that is the first trade skipped of February. So February 2nd, first trade skipped. That's literally it. That's the only setup. So you guys can see this model will throw trades at you, but if you're not, if you don't understand market structure and you don't understand, what trades to actually take, you can get really slapped around with a bunch of low quality losses. I'm not gonna lie to you guys. Right here, there's a setup. Let's talk about this one. Dang, February's throwing crazy setups. I don't even think we got this much in November last time. It's kind of crazy. Can be 100% honest with you guys, just because of how low we are, how much room we have up here, we could react from this. Realistically, we really honestly could react from this and continue up. We really could. I would not be surprised if we do that. But for me to take this zone, I'm not going to do it. We have some, stuff I talk about sitting right here. We may potentially chase. We also took this level of liquidity and already ran with it and failed. So all we have is an internal retracement, which is probably going to be a little bullish move up, which is going to give our entry candle, because internally all we're doing is moving like this. Have a move down, retracement, move down, retracement, and that retracement gives you that entry candle. It gives you false hope, and then it just continues down. But I could be completely wrong. We could get a lot of bullish buying pressure, and we could, higher time frame, go fill this in. Let me actually go on a higher time frame, see what we're working with. Yeah, I'm skipping this. I'm not gonna lie to you boys. I'm skipping this one. That one lost. Just like that. Just like that. And there was, higher time frame, there was some stuff resting here to the left as well that I kind of figured we were going to target. And that's exactly why. So that is another poor, low quality LSD setup that's thrown at you, that normal people teaching this model is telling you, hey, level liquidity, we broke our highs, right? Price came down, oh, beautiful entry candle. We have so much room above to take. This is a beautiful trade. And I'm sitting here thinking complete opposite, because those guys saying that do not understand market structure at all. So that is literally the second trade skipped in 3 days. 1 win, 2 losses. You can't make this up. I literally spun a wheel, went to a random month in 2022 that I have not ever tested, off literally this, spun a random wheel right in front of you guys. No cuts in the video, and I went straight into this month. You can't make this up. I'm trying to be as clear as I possibly can. If there's any way you guys want me to be more clear with my backtest, please comment it. Because I don't know. I genuinely don't know. I'm trying to give you the most rawest, clean backtest I can. That is February 3rd. Let me make sure I'm still recording. Yeah, I am. Okay, gosh. Good. Gosh, I can't speak. So, that's that. So, that is, your normal entry would be right there, stop loss would be right there, price just consolidated, and then fell and hit your stop loss. So that is second position that I would skip. Again, normal liquidity supply and demand through 3 setups at you already. I don't think there's anything else. I'm watching the supply zone, but yeah, I never gave an entry. Okay. 10 o'clock news. On to the next day, February 4th. Okay. 4th, supply zone right there, we're gonna be watching. See if it gives anything. Nope. It's invalid. If you're new here, you don't trade this strategy, you never trade this strategy. If we have a supply zone like this, level liquidity, you know, it's all valid, but it closes inside, the body closes inside the zone, it's invalid. So that trade is invalid there. Okay, let's look here, 9:45. We took these. In case you guys aren't understanding what I'm looking at, so this setup right here did go a candle too fast. Again, I'm sorry, but this still does not determine if this wins or loses. So, I'm trying to see. Okay. See where we're at, see where we're at. Okay, there's, you know, something very interesting here. No. We didn't do that. Interesting setup, boys, because we may have a reason to continue down. Internally, this just doesn't look the cleanest because we already took our main level liquidity. Realistically, right here, I don't even know if you can consider this liquidity supply and demand, because the point of the strategy is you take liquidity when you tap into our supply zone. We really already took liquidity and ran down. I'd have to skip this because it's not really even valid for the setup. Honestly, it's not even valid for the strategy, and it lost. So again, and the thing is that right there for me, that's in my eyes that it's not valid for the strategy. People don't say that. People teaching liquidity supply and demand, they take setups like that. Even though it wicked, right, and we come up and then we get that nice rejection, it's like, oh, we're having a rejection, but like, people don't, in my eyes, I only said it's kind of invalid for the strategy within my eyes. That's the sad reality of it, is people still trading, we're teaching liquidity supply and demand, that's valid in their eyes. And like, I just, me personally, even from learning the strategy, I never really understood that, because there's like, well, the point of our strategy is to take liquidity and tap into our zone. We took liquidity and like we already had our liquidity sweep, so why do I take the zone? So that's literally the third setup. That was a pretty bad setup, honestly. I don't know if anyone actually would have taken that, but that technically, realistically, was the third setup. We've had a setup every single day so far, pretty much. It's kind of ridiculous. This wasn't even like this in November, and it's pretty interesting to see how year over year, guys. It's always going to be different, right? This February, we already have a lot of setups, whereas this February right now, it's very dry for NAS, and gold's the one that's actually eating right now. So, yeah, that's something interesting. I'm seeing really nothing. Okay, let's talk about these setups. Of course, I went that candle too fast and retarded. Well, unfortunately, boys, that candle is going to tell you if you won or lost this trade. So that's totally my bad. I can't say I expected the next candle to absolutely bomb to take profit. So the thing is here, realistically, you just wouldn't catch an entry if this was happening. The thing with New York Open is you react off this. Oh wait, shit, is this even valid? Oh yeah, okay, I lied. It is valid. Same thing here. This really isn't even, you have your liquidity, Liquidity was kind of already taken. Price did come down, right? Just because it's New York open and it's very, very volatile. There's something I talk about with New York open that that I'm going to be teaching later on in a Discord about how manipulative we are in New York open and what levels of liquidity we target. It's kind of crazy. So it's really no surprise to me that we get a reaction off this, but our actual entry model, you really don't. You would really never get an entry off here. It's either candle close, an hourly flip, or a break of candle. All of those, your entry is going to be up here, or an hourly flip is just not valid in this scenario. You could take a New York flip if you really wanted to, something like that. It's just really, really risky. That's not even actually valid New York flip. More of New York flip's going to be your 9:30 open. But yeah, I guess there's a setup right there. I don't think anyone really take that though, as you can't really get an entry on that. You'd either enter up here. It just, and this move, by the way, guys, put $1,000 on it. Live market, this probably happened in about, give or take 15 seconds, I would say. Honestly, I guarantee you, New York, these candles are insane for New York. So, yeah, there's that if you're watching that, but that's pretty much it for that day. So, wasn't pressing anything, it was just playing. So yeah, I guess there's that setup, but again, fortunately, you'd never be able to get an actual entry off that. And also, unfortunately, I went a bit too fast. 430. All right. Let's see. Try not to get too fast, but there's no supply zones to our left. No demand zones either, so there's gonna be nothing for that day. Let's go to the next. Where are we at? Okay, right there. Wow, really overextended. Really expanding on this day. Demand zone right here, is that valid? Nope, it's invalid because we closed in the zone, so that one's invalid. Oh wow, oh, that's New York open. Okay, there's nothing valid here. There's potentially demand zone down here, but it's out of session, so nothing for that day. Okay, next. Where's 430 at? Okay, 430. Gosh, my bracelet voice. It's loud. All right. Nothing. Still nothing. Wow, okay. Is it CPI or something? Actually, that might have been, literally, because damn. All right. No, CPI is on Friday, so I don't know what that was. All right. We have a demand down here. I'll be watching, see if it actually taps or not. It's looking like it's not going to. Oh, taking out highs instead. Okay, price seems to be reversing bullish here. Still nothing valid. That's it for that day. Nothing. Finally starting to get some movement. This is all consolidation down here. Nothing again for that session. you guys can see how it just printed a bunch of setups, and then, you know, it just dies again. You know, for, you know, a week or two. So that's why it's important, you know, you're trading other pairs at the same time for sure, but that's it so far. Nothing. Do have a supply zone here. This is interesting because why is it New York open but you barely have volume? These candles should be massive right now. I'm kind of confused. Something, it's not like a bank holiday or anything, I don't think so. No, because it's a Tuesday, I wouldn't think. Well, we have a supply zone here. The level of liquidity. And the thing is, you're looking at this and you're like, okay, it looks completely bullish. You're 100% correct. Definitely correct there, but there's nothing to the left. If I took this, it would be a flip because of how big that wick is. This trade could go either way, boys. I'm not gonna lie to you. This isn't one of those trades where it's like, I don't see a reason not to take it. I see a reason not to take it. I also see a reason to take it, to be fair. There's just so much open space here. This low never got taken right here to the left. So, if you took this position, it would be like this. Stop loss right there. If you're targeting 1 to 4s, it'd be under this low. Could go both ways. It's New York Open. It's very volatile. We could come up here and rip through these highs. We go also come down here and take out these lows. Personally, I will take this trade. I'm openly saying this isn't, you know, 100% A+ trade. This could go both ways. If it loses, I would not be surprised. But we'll see what happens. This one did end up losing. So, we did come down. We did end up taking this low. And this is something you guys can, like, do live markets and understand. I told you guys before I actually entered this trade was this low was not taken. If we're coming down, the main reason I entered that low was entered this trade was because this low was not taken. So you could understand that and be like, well, instead of targeting a strict 1 to 4, why don't I just target that low? Because that's the whole point we're shorting, was to take out that low, right? We don't know how far we're going to displace if we displace under it. So if you just targeted that low, you'd still not lock in a 1 to 3. For backtesting purposes, I'm just going to stick to strict 1 to 4s. But stuff like this is what I do live markets, because not every trade realistically is a 1 to 4 trade. I'm not gonna lie to you guys. Some of them's 1 to 2, some of them's 1 to 3, some of them's 1 to 4. Some of them you can really take advantage and get some, you know, bigger swing plays out of them, but they're a lot rarer. So there's that trade for you guys. But yeah, if you were targeting the actual like strict 1 to 4s, that one would have lost. But that's exactly kind of what I said was this low is not taken. Expect, you know, obviously if we're gonna continue down, that's why I'm shorting, was because mainly that low was not taken yet off New York. There's some with New York and taking lows that you know I talk about, but that's the main reason. So live, like me personally, I would take that into consideration. And if you learn this type of stuff, you could take that into consideration and just be like, cool, I'm just gonna target those lows, because below, if it's gonna displace, it's gonna probably displace really deep. So either you target this low or you target the whole way down here. You get what I'm saying? So that's that's the understanding of that trade. So that's pretty much it there. Let's go to this next day. 430. There's nothing. So nothing. Trade right here. The nice level of liquidity. Oh my gosh, bro, this shit's valid. I'd be going too fast on this. We're not even gonna include this, but if you guys did want to take this trade, I went too fast, but there is a level, there is a supply zone here. It's kind of mid. Yeah, oh wait, 8:30. Pretty sure there must have been news here because that's very volatile for an 8:30 candle. So, but there was a reaction off the supply zone, but I'm pretty sure that was mainly from news, so it's probably not valid. But I don't know. All right, February 17th, 30. Here we are. I was gonna say there's supply zone here. I really didn't even mention it because I think it was just so low quality that no one would really even take it. But if you did, you have liquidity here. There's a reason for it to move down potentially, just because you know we are bearish right now, but it really just doesn't make sense for the strategy because we just took out our liquidity and rejected and then pushed up, right? We don't know how many times it's gonna make a move like that again, right? We could push up, reject, and then push up and then reject, which is pretty much exactly what we did. We pushed up, reject, and then pushed up one more time, and then we got the move. So that's why I just don't really like doing setups like that. So if you would have taken that, it would have stopped you out. But I guess so. Yeah, I'll just keep that one up. Simultaneously, though, we do have a demand here. I didn't even notice this. Do have a demand sitting here with this level of liquidity. What time is this? 8:15. What is this? Is this red folder, guys? I don't even know why I'm asking you because I'm talking to no one right now. It's a YouTube video, goddamn. I don't know. I feel like that might be red folder. I'm not gonna lie to you. I want to play this trade out. I don't know if it's red folder or not. You know what? All right, boys. Get it 2022 real quick. February, what is that? 17th? No. Oh, no, it's not red folder. What the hell? I'm retarded. Doesn't even have an effect. Okay. Let's look at our time frame real quick. We're reacting from anywhere. Important. Well, higher time frame trend is mainly down, so we reacted off that supply zone. Yeah, okay. You know, as good as this demand, you know, it looks half decent. Rejecting off this order block, we're overall bear. Everything's kind of flipped towards bearish. So personally, I will skip this trade. If you would enter this trade, it would be right here. Keep getting messages. It'd be right here. Your targets, you know, if you're targeting stroke 1 to 4, it'd be right there. That would be that trade. I'm personally gonna skip this, but again, all this stuff, it could play out, could 100% play out. But for me, I don't really see the point in taking this trade, but we'll see what happens. It did continue down. Yeah, it really just continued the downwards trend. That's why I would not be buying right there. So there's two positions, literally, that were valid. You could have taken 2 losses today, but I didn't take a single one of them. So, like, you can see how many setups this strategy throws at you, and it's like this for every strategy. They will throw the setup at you, the entry model at you. You just have to understand market conditions on when to take them, when not to take them. That's literally the core understanding of it. And it's like that with every single strategy. I've tried other strategies out before, and I don't know why it's not taught in this strategy. It's like this strategy just has an entry model, and like that's it. No one talks about outside factors. I don't know why. It makes no sense to me. But whatever. There's just nothing right now. That's it for that day. So what are we at currently? 4%, 1 winning trade. Oh wait, no, I guess I technically targeting 1 to 4 in that other one. So if you're targeting strict 1 to 4s, you'd get 3% right now. But that's pretty much it. And again, guys, this is just one pair. I trade other pairs. I trade NAS and gold. Gold's been eating, and then I also trade Forex as well, and then I also trade oil as another futures pair as well. So yeah. Okay, now we're gonna get into some interesting price action after New York Open. Here's the first candle. Let's see if we get an entry candle. New York Open is next candle. I'm sorry, boys, but I can't take this trade. Okay, that wasn't that bad, actually. I was gonna say, New York, I could never enter on this candle right here with New York Open next candle. Never, because I know that shit's gonna be volatile. That wasn't that bad for some reason. Okay, so we just took out lows. I don't like how we didn't really displace much lower, to be fair. We closed. I mean, I guess we did close below. We're bearish overall. Hard time frame, we're bearish. Again, I personally, I would like us to see us close, a lot lower, but we did still sweep internal liquidity. We still closed below it on the 15-minute time frame, so that's important. Level liquidity, it's not like this level liquidity was taken right here and then ran down. We never took it, right? So this liquidity is still resting right here. Supply zone, reaction. Me personally, I'm not gonna lie to you guys, I would definitely wait for this New York Open close or break of candle, whatever you wanted to enter, because New York is usually very volatile. So entering on this candle when New York opens and it could go just up and down, whatever it wanted to do, very risky for me. But now that we got that close, I would enter, you could enter on this close, you could enter on this break candle, whatever you wanted to enter on. If you entered on New York close after you saw that you didn't get wicked out, then you could do that. If you wanted to enter on break of candle, which would be the pretty much the exact same entry, you could do that. We'll just say candle close for this example. And yeah, you could target, if you targeted strict 1 to 4s, it'd be the whole way down here. You could target lower, smaller than 1 to 4s, because we didn't really take this low too convincing. You could just target maybe 1 to 2 if you wanted to do that because of that. But yeah, we'll see how this trade plays out. That's literally exactly what happened. I actually went to 1 to 2, did retrace, and then if you would have done the strict 1 to 4s, that shit would have hit too. So that's pretty much that trade. And that's, again, if you want to do 1 to 2s, 1 to 4s, whatever you want to do like that, that's all personal preference, however you want to do that. But again, if you're doing the strict 1 to 4s, if you want to go that route, which it does make more profit. Oh god damn, it does make more profit year over year. Make sure I'm still recording. All right, I had to make sure because my phone is kind of on a low volume or low battery. But anyways, strict 1 to 4s do make more profit, I've noticed, rather than we had old TP rules that I was originally taught, which weren't really tested obviously that good. Strict 1 to 4s make like triple the profit of those, but also understanding when to hold for a 1 to 4 and when to maybe take 1 to 2s makes a lot of sense. When you're in trend like this, you're normally fine because you're in trend, right? You have a whole reason to continue moving down. But if you're taking a quick move counter trend, maybe you're just taking a quick liquidity sweep counter trend, that would make sense to do a 1 to 2. Or that example I showed you guys before, where the only reason we're shorting was because of that low right there. Under that low, if it was taking that low, we had nothing. So price was probably really gonna drive down, but we're bullish overall. So if we take that low, we're just going to take that low. Or if we take it, we're going to continue down. So like, it's like the only reason you're shorting is because of that low right there. So you could just target that low instead of targeting a strict 1 to 4, which is just a number, right? That has no meaning where price is actually going to react from. So you can take that into accountability and just be like, cool, I'll just target a 1 to 3 at this low, you know? And sure enough, you know, that would have hit. But again, do the strict 1 to 4s like just how we did on that other one. That would be 2 wins right now, 1 loss that I would have taken. So that's 4, 8, 7% right now for February. So yeah, that's pretty much it. I don't think that was pretty late in session. Yeah, that was 9:30. Would have held this to about 12 p.m. my time, Eastern Standard Time, and that was it for that day. So that is 3 positions I lied that we would have taken in February. And gosh, I don't even know how many losses. I literally lost track of losses. We're gonna go back at the end and figure it all out. But see if we get this day here. There's just nothing for that day. I think what, this is the 3rd week of February we're on right now. Okay, there we go. Demand down here. Still didn't tap. It's invalid now, so nothing yet. Supply zone I would not take, and it lost anyways. Well, there really wasn't even an entry there anyways, but I was gonna say there's supply zone with these 2 levels of liquidity, but why would you be really shorting when we're bullish? So that's that. Say demand, liquidity's not valid. Europe opens and we don't. All right, that's that for that day. There's 430 out here. Okay. Demand sitting down here. Still never tapped. Not be taking this demand anymore. Lost anyways. Price isn't trending half bad. It's just really giving no trades, to be fair. There's demand here, but there's no valid liquidity. That one lost. No supplies either. Yeah, really trending markets, but nothing. Demand that closed inside. A lot of invalid setups that day. Dang. All right, on to the next, on to Friday. Here. There's demand down here under these two bottoms. Another demand printed, but price is just running. Oh, invalid. Another demand down here, and I look like we're coming down to it. Finally coming down to it. It's gonna be our last candle of the session, yeah, and invalid. That's it for that day. Oh, Sunday. 4:30, okay, so this is the last week of February. So, let's see what we get this week. 7% already for this month, I'm perfectly fine with that. 7%. On again, it all comes down to the capital you're trading, guys. If you're trading, copy trading, a couple 100K accounts, 2, 3, maybe 400K accounts, you make 7% in a month. Do you know how much that is? Genuinely, off one pair, taking 3 trades, 7% in a month, a couple 100Ks. That, you know, the copy traded a couple 100K accounts. It's like $20,000 off what? 3 accounts, 300Ks. That's 21 grand off 7%. You don't need to be making these crazy percentage amounts. It's literally all about the capital you have and just being patient for good setups. But that's just off topic. Let's go back to backtesting here though. Still nothing, still nothing. It's technically supply, not take. Yeah. All right. Here's this one. I did go candle too fast, but I think anyone would understand why you wouldn't be taking this trade. Supply zone, liquidity. If you're zoomed in like this, looks like a good trade, but if you just zoom out a little bit, you understand we're obviously bullish, so like there's no reason to be shorting here. But again, that would be just another position you'd skip. I think most people would actually skip this position, right? I don't really have to give you guys a full rundown. I think most people would just understand that we're in a bullish environment. There's no reason to really go lower. Market's bullish. Why would we be shorting? So yeah, that's obviously that one right there. But that's it for that session. I don't know how many days in February we have, so. Oh my, that was it. Dang. Okay, that was it. All right, where's my phone? Oh shit. I'm retarded. I'm recording with my phone. Holy hell, I'm cooked. Holy hell, I'm cooked. I'm genuinely fried, bro. Okay. All right then. Let's add up how many positions were technically skipped, right? Technically skipped. Some looked a lot more convincing and I still skipped. Some were a lot more clear to skip. We're just gonna count them all pretty much. This, obviously, valid short position, but it's bullish. You wouldn't be taking this trade. That's one, okay? I think I've left them marked up, the ones. Okay, so this was obviously a position we took. That was one win, which we know that ended up 7%. But, you know, we skipped that one loss. We skipped this one and this short. So there should, wait, was it valid short? Yeah, there's valid short. So there's 2 positions on this day. The position from the 28th. So that's 3 positions skipped. That position I would have taken. That one's already counted in. I know there's a lot at the very beginning of the month. 4 positions skipped right here. Liquidity was already taken, right? And that's exactly, you know, liquidity was taken. Right here's liquidity. Liquidity was already taken. Tapped in, and obviously that's lost. So for some of those, again, like those ones are a lot clearer to skip. This one. Okay, so that's 7%. I believe there was a position here that I said I was skipping. Why can I not find it now? Right here it is. So here's 5 positions that have been skipped. So then I must not have kept them on. Thought I kept these zones on every one I skipped, I guess not. So there's probably a trade or 2 I skipped as well that it's not counted for. This again, told you guys I was skipping this level of liquidity. Just felt like price was going to target lower, and that's literally what we did. So that's that. 5 positions skipped. And I know the third we had a position. I know. Where is this at? I know for a fact. I swear. I might be cooked, but I swear we did, bro. Right here. Was it this one? With this liquidity that we already taken right here? I swear it was this. I swear there was setup on the third because I told you guys. I swear, because I told you guys that I skipped. Oh gosh, I can't remember now. And I know there was setup on the 4th. That was that one. There was a setup, I'm telling you guys, on the 3rd. I want to say it was this setup right here. No, I'm telling you. Yeah, it definitely was this setup. Now that I think about it, it definitely was this setup. go back on the YouTube video, let me know. I'm pretty certain it was this demand right here. This level of liquidity, I didn't like how this was kind of already taken, all this resting stuff to the left, and price just flopped pretty much straight down to it. So that was what, 7 positions skipped now. 6 or 7 positions. Okay, I'm really fucked. Really fucking cooked. All right. I'm stopping the YouTube video there. So that is that. 7% gained, like 7 losses, maybe 6, something around there. Because I thought I had them all marked up. But no, realistically, it was, I think, 7 positions. Because we counted 5 and then we added 2 of these. So I'm pretty sure, yeah, we added this one and this one. So I'm pretty certain it was 7 trades skipped. And like these right here are trades that actually a lot more people is going to be taking than you think, because, you know, like we have a lot of clear space to the upside. We have nice liquidity, you know, price gave a good reaction, and it's just understanding that, you know, price is going to come take out these lows. And you know, I talk about it on a lot deeper level, just not really on YouTube, to be honest, and on how to actually understand why price wants to move lower. But for me now, it's kind of just like a lot easier to see, to be honest. But that 7 position skipped. 7 position, we're 7% locked in, literally off 3 trades. 3 trades. If you would have copy trade that on a, you know, couple 100K accounts, that's a lot of money. It's literally the capital you have, and you know, being patient enough to, you know, pass these accounts and having the capital to upfront to, you know, buy these accounts. You know, and I do recommend risking heavy on evaluations to get off of evaluations as fast as you can. But that all depends on your financial situation. You know, if you're able to upfront a lot of cash to actually buy those accounts, so that, you know, differs for everyone. But that's what I recommend, because once you actually have everything down, right? If you're still learning, then I don't recommend that at all. But yeah, I mean, that's the whole thing, is just being patient to, you know, pass these accounts and stuff like that. But once you have them, guys, you can make 3-4% on a couple 100Ks. If you had 2, let's say you had 300Ks and you made, you know, let's say 4% in a month. 4% in a month on 300Ks is $12,000, just 1%. 300Ks, 12 grand in a month. Like, do you guys not see the insanity of that? 4%, how small that is? And it all comes down to you can't get that type of percentage unless you're skipping these low quality setups, and that's literally what I'm going to be teaching. But nothing's public yet. I'm still, you know, working on my private Discord community that I'm working on. I'm just pumping videos in there. I'm not, like, these YouTube videos and these backtest videos, I hold back a lot of stuff. I could literally use, you know, everything to my advantage and you know, narrow down all of these charts and describe everything to a T, kind of what's going on and what I see. But I don't. I just kind of, you know, briefly go through them. I use in my mind what I see, and I just kind of, you know, tell you if I'd take this trade or if I'd skip. That is literally this video concluded. I did this for November, made 4%. I did this for February, made 7%. I showed you guys the trades. I spun a wheel 4 years ago on NQ where I have nothing tested, guys. I don't know what these statistics are. You can look around my room. I will literally show you guys. Well, actually, my phone's stable. Wait, I got it. I will show you guys. I have my MacBook here. It's sitting on its home page. I have my PC here. That's literally it. That's all I have. I have nothing here. I've never tested this in 2022. I completely spin a wheel. I know that this works on NQ though, because I have tested it 10 years ago in 2016. Okay, I know this works, and I tested the last 3 years. Or up until 2023, yeah, 3 years. And that's just on this pair. Gold, I have tested like 7 years right now, so it's kind of crazy. But yeah, you can't get more transparent than that. If you guys think I'm doing something non-transparent, please comment, because I will gladly show you guys, you know, anything that you say I'm doing wrong. If you guys want me to do, you know, anything else, pick a random year and a random month, I'll even do that. I don't care. But yeah, that's pretty much it. We got February, so I'll have to remove this one, and we'll be down to these. We should honestly just go through all of these and get 2022. But yeah, we did November, now we did February, and that's pretty much it for this video, guys. 7%. I had no clue what to expect. Could be a dry month, could be a fast month. I showed you every single setup and why I would take them, why I would skip them. Okay, I don't know what, more proof that the strategy definitely works. It's just not displayed and not taught right. A lot of people like to show 90%, 75%, 80% win rate and, show a cherry pick month. And what happens is beginners come in and all they see is join my Discord for 90% win rate. You're gonna make all this money. So they join and then they're taught this right here. It's exactly what they're taught. Guys, look for this and enter right here. 90% win rate. You're gonna catch all these trades. It's not the truth. You guys saw how many times a setup like this popped up and I skipped it. You have to understand the market on a deeper level. So that's it for this one. Hope you guys enjoyed this, and yeah, that's pretty much it. I'll see you boys in the next one. Peace.